Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about NANO NUCLEAR ENERGY INC. Quarterly Report. NANO NUCLEAR ENERGY INC. offers a diverse range of businesses and services that cater to various needs in the nuclear energy sector. At its core, the company is developing cutting-edge reactor systems, including the KRONOS MMR energy system, Loki MMR, Zeus, and Odin reactors. These innovative designs aim to provide efficient and safe energy solutions for a variety of applications. In addition to reactor development, NANO NUCLEAR ENERGY INC. is also focused on fuel production and logistics. The company is developing a high-assay, low-enriched uranium fuel processing facility, which will serve as a pipeline for the nuclear reactor industry. This facility will enable the production of high-quality fuel for various reactors, streamlining the process and reducing costs. Furthermore, NANO NUCLEAR ENERGY INC. offers specialized services to support the nuclear energy sector. These include fuel transportation and nuclear consultation businesses, providing expertise and logistical support to clients in the industry. With its comprehensive range of products and services, NANO NUCLEAR ENERGY INC. is well-positioned to play a significant role in shaping the future of nuclear energy. The company's reactor systems, fuel production facilities, and specialized services are designed to cater to various needs in the nuclear energy sector, from remote and specialized applications to large-scale industrial operations. By providing innovative solutions and expert support, NANO NUCLEAR ENERGY INC. is poised to make a lasting impact on the industry. Unfortunately, I do not have access to the text you provided. However, I can still provide a general overview essay on what might cause a stock price to drop. The stock price of any company, including NANO NUCLEAR ENERGY INC., can fluctuate due to various market and economic factors. One major reason for a decline in stock price is poor financial performance, such as decreased revenue or increased losses. This can be caused by a range of issues, including inefficient operations, high production costs, or failure to innovate and adapt to changing market conditions. Another factor that can contribute to a drop in stock price is negative news and publicity surrounding the company. This can include scandals, product recalls, or other controversies that damage the company's reputation and erode investor confidence. Additionally, changes in industry trends or regulatory environments can also impact a company's stock price if it is not well positioned to adapt. Furthermore, external market factors such as economic downturns, interest rate changes, or shifts in global demand can also affect a company's stock price. In the case of NANO NUCLEAR ENERGY INC., specific reasons for its stock price drop may include any combination of these factors, but without access to more information, it is difficult to provide a detailed analysis. Investors and analysts closely monitor a range of metrics, including earnings reports, revenue growth, and industry trends, to gauge a company's performance and potential. However, the stock market can be unpredictable, and even well-performing companies can experience fluctuations in their stock price due to various factors beyond their control. NANO NUCLEAR ENERGY INC. market capitalization of $1 billion is materially smaller than most of its industry peers of roughly $9 billion. NANO NUCLEAR ENERGY INC. trades at a higher price-to-book ratio of 4.7 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 3% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth for a company are multifaceted and influenced by various factors. On one hand, the development of innovative technologies such as the KRONOS MMR energy system and the launch of fuel transportation business by 2028 are expected to drive revenue growth. Additionally, exclusive licenses, agreements with key partners like GNS Gesellschaft für Nuclearservice (MBH), and growing demand for clean energy solutions also contribute to revenue growth. Furthermore, acquiring expertise through consulting and services business, obtaining regulatory licensing for microreactor prototypes, and technology acquisitions and collaborations are other significant drivers of revenue growth. These factors not only enhance the company's capabilities, but also create new opportunities for revenue generation. On the other hand, several risks threaten revenue decline. Delays in acquiring assets and businesses within the nuclear transport industry, failure to launch fuel transportation business by 2028, and uncertainty around regulatory approval for consulting services are some of the key risks. Regulatory framework changes, delays in regulatory review, and changes in partner capacity also pose significant threats to revenue growth. Moreover, broader economic factors such as inflationary pressures, material cost volatility, logistics constraints, and government incentives for advanced reactor supply chains can impact revenue growth. The development of fuel supply chain business, anticipating significant shortfalls in fuel supply, is another risk that may lead to revenue decline. The company's financial performance reveals a concerning trend. According to the provided data, the company has been experiencing negative operating cash flow for the period ending December 31, 2025. Specifically, the 3 months ended on this date resulted in a net loss of $3,989,840 in operating activities. This indicates that the company is utilizing more funds than it is generating from its operations, resulting in a net cash outflow. Management is emphasizing a strategic shift towards becoming a commercially focused, diversified, and vertically integrated nuclear energy company. The primary focus is on developing the KRONOS MMR reactor and achieving vertical integration across key aspects of the nuclear fuel supply chain. This involves 4 business lines: nuclear reactor business, fuel supply chain business, fuel transportation business, and other opportunities in the nuclear energy industry. The company aims to commercially launch the KRONOS MMR energy system in the early 2030s and expects to be commercially ready with the reactor by then. To achieve this goal, management is prioritizing resources towards developing advanced reactors for clean energy infrastructure, including the KRONOS and other designs and technologies. Additionally, they are exploring strategic alternatives for the Odin reactor and developing a domestic HALEU transportation company. In terms of funding, management has sufficient cash to fund current operating and research plans for the next 12 months. However, future development will require significant amounts of cash resources, which will be financed through public or private equity or debt financings. The company has made several strategic moves through acquisitions and divestitures. In terms of acquisitions, the most notable one is the purchase of GFPL, which was later rebranded as True North Nuclear. This acquisition suggests that the company is expanding its capabilities in the nuclear sector. Another potential partnership for the Chalk River project in Canada indicates a possible expansion into international markets. However, it's worth noting that this is still a potential partnership and not a confirmed acquisition. On the other hand, the company has also made divestitures, including the sale of the Odin microreactor design and associated intellectual property to Cambridge Atom Works. This move suggests that the company is streamlining its operations and focusing on core areas of expertise. The financial performance of a company. A brief overview, a review of the company's financial performance, reveals some key insights. One notable aspect is that the company has chosen not to pay dividends to its shareholders. This decision suggests that the company may be prioritizing reinvestment in its operations or other strategic initiatives over distributing profits to investors. In terms of share buybacks, there is no clear indication of any significant activity. While this does not necessarily mean that the company will never engage in share repurchases, it does suggest that they are not a current priority for the company's management team. Overall, these findings provide a glimpse into the company's financial strategy and priorities. Concerns about inventory buildup and supply chain disruption are valid concerns for several reasons. Firstly, the ability to source or internally develop a necessary fuel supply chain and transportation capabilities is a significant concern. This issue has been highlighted on page 3 of the report. Furthermore, developing a domestic low-enriched uranium, LEU, and high-assay low-enriched uranium, HALEU, fuel supply chain poses another challenge to the program. As mentioned in page 38, this could lead to supply chain disruptions. Additionally, global supply chain conditions, vendor qualification requirements, and availability of domestic manufacturing capacity will also impact development costs and timelines. This is a concern that has been raised on page 43 of the report. Lastly, collaborations with academic institutions and research organizations may be affected by delays or changes in partner capacity, which could further complicate program timelines. That concludes the financial summary for NANO Nuclear Energy Inc. Feel free to comment below, and I will be happy to answer them when possible.